While going through some online discussions about BlockDAG recently, I noticed something that made me pause for a moment. Several investors were sharing how many BDAG tokens they currently hold. Some mentioned hundreds of thousands. Others talked about owning millions. One particular comment stood out. The investor explained that he plans to sell part of his tokens once trading becomes available, while keeping the rest for the long term. At first glance, that sounds like a perfectly reasonable strategy. Many investors do exactly that. Take some profit early and hold the rest in case the project grows over time. But when I thought about it a little more carefully, something about this situation raised a quiet question in my mind. Not necessarily about the project itself, but about how markets usually behave when large amounts of tokens eventually become tradable. BlockDAG has built a lot of attention during its presale phase. Many early participants entered the project at different stages, often accumulating large positions over time. In crypto, presales can be attractive because early buyers hope to enter before the wider market arrives. The expectation is simple. When trading eventually opens, demand from new buyers could push prices higher. Naturally, that moment is what many investors are waiting for. The moment when tokens that have been locked or restricted become part of an open market. And judging from the conversations happening online, many investors are already thinking about their strategy for that moment. Some plan to hold, others plan to sell part of their allocation, which is normal. But here is where things become interesting. When we step back and look at the situation from a market structure perspective, the story becomes slightly more complicated. Every market, whether it's crypto, stocks, or commodities, follows a basic principle. Prices move based on the balance between supply and demand. If buyers are strong and demand grows faster than supply, prices usually move upward. But if supply suddenly increases and buyers are limited, prices often move in the opposite direction. In presale-driven projects, early investors sometimes hold very large allocations of tokens. That is simply how early-stage funding models work. Over time, those tokens gradually move from restricted environments into open markets. And when that happens, some early participants naturally start thinking about selling part of their holdings, not because they dislike the project, but because taking profits is part of investing. But when many investors hold large allocations, even selling a small percentage of those holdings can represent a significant amount of supply entering the market. But when you look closer, the key factor that determines what happens next is not the size of the holdings themselves. It's liquidity. How many real buyers are willing to purchase those tokens at that moment? And this leads to a bigger question. If a large number of early investors eventually decide to sell part of their tokens when trading becomes fully active, who will actually be buying those tokens? Will there be enough new investors entering the market to absorb that supply? Will the demand grow quickly enough to support the selling pressure? Or will the market need time to find its natural balance between buyers and sellers? These are not accusations, and they are not predictions. They are simply questions that naturally appear whenever a project transitions from a presale phase into a fully open market environment. Crypto history has shown many examples where excitement around a project creates strong momentum. But it has also shown that the real test of any token often begins when liquidity becomes visible and trading activity starts to reveal the true balance between supply and demand. Because numbers on a dashboard can sometimes look very impressive: large token balances, strong community excitement, optimistic expectations, but markets eventually respond to something much simpler: actual buying and selling activity, real liquidity. Now, to be fair, BlockDAG could still perform very well once the market opens fully. New investors could arrive, demand could grow, the ecosystem could expand over time. All of those possibilities remain open. But experienced investors often try to look at situations from more than one angle, not just from the perspective of hope or excitement, but also from the perspective of market mechanics. Because markets do not move based only on expectations. They move based on the interaction between buyers and sellers. So perhaps everything unfolds exactly as supporters expect. But until real trading depth and liquidity become visible, one quiet question will likely remain somewhere in the background. When the moment finally comes for many investors to sell part of their holdings, who will actually be buying? If you enjoy calm and rational discussions like this, feel free to like the video and share your thoughts in the comments. I'm always interested in hearing different perspectives. And if you want more independent and thoughtful crypto analysis, consider subscribing to the channel Bias Positive Digital Rise. Thanks for watching, and I'll see you in the next video.